Hey guys, what's up? Alec back with the daily stock market, and look at that, an overall green day for individual stocks in the stock market. Palantir leading the pack up 7.2%. We also have Unity up 6%, TSM up 5.9%, and the list goes on and on. This week we have another exciting earnings week with big staple consumer brands reporting like Target and Walmart on Thursday. Monday is slow, but Tuesday before the open, we have the Home Depot, we have we have PaySafe, we have Canadian Solar. All right, Tuesday after the close, not much going on, but then we head over to Wednesday before the open. We have Target, Advanced Auto Parts, JD.com, which is a huge Chinese company. We also have Xpeng, Jumia, Tencent reporting, some other international stocks to be having your eye on as well. Wednesday after the close, we have Cisco. And we go over to Thursday before the open. We have another well-known Chinese-based stock. We have Alibaba, which is going to be very scrutinized and watched over. So make sure you're marking your calendars for Thursday, because we have Alibaba, not only Alibaba, but also Walmart, one of the biggest companies in the world. Following that, we also have Macy's. So now that we know which stocks are reporting, let's look at the most scrutinized stock. And number one is going to be Alibaba at $83 per share. Look how bad the stock has had it recently. Downward momentum, 14% losses in the last 3 months. Okay, in the last 5 years, we see a 42% loss. And we saw an all-time high in October of 2020 at $309 per share, and it's down 73% since then at $83 per share. So what is going on? We know there is some tension going on with Chinese-based stocks in general, but the company, let's look into it to see if it has great fundamentals and if it's something that we want to have on our watch list this earnings season. Okay, as we scroll down, we can kind of see that the volume is around 10 million, which is huge. Average million is closer to 12 million. Market cap is 214 billion. PE ratio is 17, okay, implying they're actually a great deal right now, especially with a moat like Alibaba. You know, they own AliExpress. Okay, so here we have Alibaba's income statement and balance sheet pulled up. Before we go over that, by the way, JD.com is reporting earnings 24 hours before Alibaba. So watching JD.com earnings also can give us some insights on Alibaba. So we have total revenue pulled up first. Year over year, we can see they gain double digits consistently every year. 2023 has been a little bit slower, not gaining much. And it looks like a big goal for them would be $1 trillion on total revenue on their income statement. But if we go over to their net income, we can actually see that they have 73 billion in net income, which is a lot lower than 2020 and 2021. They even went as far as losing 75% of their net income, which the stock market cares about drastically right now. Specifically, the stock market cares about net income and growing net income. Right now, we see out of the last 5 quarters, Alibaba reported 1 negative quarter of net income on their income statement. So that's not the worst thing in the world, especially when they're doing 46 billion in profits, 21 billion in net income, 30 billion in net income. So they're consistently making money. The revenue is consistently growing. They're a great company. If we scroll down, we can look at the balance sheet. We see that the debt to asset ratio is 35%, implying that Alibaba is a great deal right now. The PE ratio is low. The moat is high. The income statement is fantastic. We also see the company is a positive earning company. The balance sheet is amazing. Okay, and that goes in hand in being a positive earning company. They're going to have more cash and liquid, and not have their back against the wall during a hard time, more money to spend on research and development, and the list goes on and on. They could acquire more companies with more cash on their balance sheet. So look for big things from Alibaba in the future. Obviously, their pushed down right now and beaten down. They're a stock nobody wants to be associated with, but the sentiment might change in the future. And right now could be a good time. So here we can see an analyst article that's interesting. It says retail earnings begin this week and it's getting worse, an analyst says. Earnings to watch: Walmart, Target, and other retailers report, but Wall Street is not optimistic. Considering 3 years of economic upheaval that have driven up prices and consumer resentment, consumer spending could be worse on earnings this quarter. When the nation's biggest retail chains report this week, Walmart, Target, and Macy's are among just some of them. Executives could help further dissect what's being called the bad vibes economy. As holidays approach, Wall Street remains skeptical and signal across the retail industry remain mixed. Our macro view is one of caution at the low-end consumer, and within the U.S. wholesale channel, department stores and outlet channels into spring/summer 2024. An analyst noted last month, lower income consumers have been hit hard by rising prices for basics, and those higher prices overall have made consumers more selective when they spend on things they want rather than things they need. Higher energy prices and borrowing costs, as well as stricter credit conditions and the return of student loan payments, have also posed threats to demand. UBS analysts in a research note said on Thursday that within the so-called soft line of retail, that is things like clothes, retailers were still cutting prices in an effort to clear items that shoppers don't want. And it's getting worse, the headline read. Our view in the market underestimates the pressure on the industry sales from the U.S. consumer, decreasing ability and willingness to spend on apparel and footwear, the analyst continued. We'd expect sales trends to weaken over the course of Q4 2023, they said. Plus, new October data increases our conviction companies will experience more gross margin pressures than the street forecasts, or Wall Street forecasts, because it shows discounting increased year over year and inventory levels have reached a new peak. Home improvement retailer Home Depot, ticker symbol HD, reports results on Tuesday as a tight supply of the available homes. Higher prices and mortgage rates continue to raise questions about homebuyer demand. Target reports Wednesday as more expensive essentials leave it to consumers with less room to spend outside the grocery section. Walmart, which reports on Thursday and sells more groceries, has fared better with investors, and the company has said it's attracted both higher income spenders and lower income shoppers seeking cheaper options. However, consumer traffic analysts found that foot traffic fell in the third quarter for those three retailers, as well as BJ Wholesale Club, ticker symbol BJ. One takeaway from the data is that screws do appear to be tightening on American consumers, as visits to most of the retailers mentioned are down year over year. Still, the National Retail Federation and industry groups said it expected record spending during the holiday season, which is defined through November 1st all the way to December 31st. The group said it expects sales to increase between 3 to 4% to a range of almost $1 trillion. Holy cow. This year's holiday season will follow 2021's supply chain backups that pushed up shipping costs and a wave of discounts last year, as those backups, coupled with a shift in demand toward basics after the war in Ukraine, initially drove up the food prices, forced many shoppers to prioritize basic necessities. But the chief economist, said despite the pressure on shoppers, some government data showed consumers had more pandemic-era savings than once thought. While there is significant uncertainty surrounding the measurements on how well the economy is performing, it's continued to move forward and defy recession predictions, proving it can be more resilient than anticipated. Okay, that's a very interesting thought to end that kind of article. Now, if you want to pause the video and kind of read through some of the article that we skipped, go ahead. But this week in earnings, we also see AAP, Advanced Auto Parts, report earnings after the S&P 500 global ratings of September downgraded the auto parts retailer credit to junk and said it believed the company had given up market shares, admin strategic missteps. Warner Music Group, ticker symbol WMG, also is reporting. Tyson Foods is an interesting stock that is reporting on Monday. They're the large poultry and beef producer. Could offer more color on this trends when it reports after raising prices last year. Okay, in August reported to decrease in prices for pork and chicken, but consumers are still struggling to keep up, and the company is closing some of its plants in an effort to cut costs. Media outlets in September also reported that Tyson is under investigation. So yes, overall, there is a lot of things to keep your eye on and track, but luckily for you, we have a Discord where it all is in one place and alerts are sent to you directly when to buy, when to sell. So it's like a text message straight to your phone anytime I'm taking out option calls, swing trades, and even long-term purchases as well. So if you want to see exactly what I'm buying and some other top traders in our Discord, message me here on Instagram. The Daily Stock Market, now over 218,000 followers and 851 posts. Click on success number 9 on the highlight section of my Instagram and check out some of these amazing positive testimonials. And I want you to be one of these next positive testimonials. So all it takes is just message me, check out the website for yourself, see what it entails, and if it's inside your budget, then let's make some money together in the stock market. Thank you guys so much. Share this video with a friend. Leave a big thumbs up. Let me know what you guys want to see in the next video. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.